Hey everyone, today we want to look at more specifically some price targets that we have for both the price of oil and some ETFs that are related to that, as well as on silver. The latter asset, silver, is of course a lot more volatile, so we will have to give that a bit more of a leeway. But let's first dig into some charts on the price of oil, and this is continuing our discussion that we've done here in these videos over the past number of months on our bullishness on the energy sector and the price of oil. So let's have a look at this. So as we flip on over to the chart, what I brought up here is a very simple long-term monthly chart of the price of oil, and this is just a simple absolute chart. I usually actually make this what's called a logarithmic chart because it gives us sort of a bit more optics of how sort of coiled up this move here is. In this case, we're looking at oil, and you can see we've had a real nice move off the lows, of course, in the March of April 2020. Really significant move higher, relative outperformance and absolute great performance of the energy sector. We think it's got a lot higher to go. So that's what it looks like in the monthly chart. If you look a bit deeper, you go into the weekly chart. Again, you can see things very coiled up here in the logarithmic chart. And I'm going to just quickly go back to the arithmetic chart so you guys can see this without having to squint too much. But basically what we're looking at, and I drew a bunch of stuff in here, so maybe I should remove some of these lines so it gets a bit clearer. But you can essentially see that the price of oil here, and these are oil futures, right? I'll show you guys some ETFs, is really coiling up after a consolidation period that's now taken place for, let's call it 3 months. And we do think that this is likely going to resolve higher, and very specifically the profit target, the price target that we have on the price of oil for sort of the foreseeable future for this sort of move for now is $80. The $80 level ticks a lot of boxes from an extension perspective, likely from a timing perspective in terms of what a measured move over sort of a multi-month period would look like. And just so you guys know, I mean, right now, this, as I'm recording this, the price of oil is at 68, so $80 is roughly 17% or so higher, give or take. So that's a pretty good move in oil if we were to see that. Just to give you an idea, the move that oil saw from the November sort of period up to now was essentially a double, right? So we've had a big move already, but we do think there's an extension move here, and it could sort of come on the back of some sort of a squeeze, as a lot of people still, I don't think, necessarily believe this move. Now, of course, one of the questions a lot of you guys are usually asking is, how do you trade this with an ETF? Because you don't trade futures, fully understandable. So a simple ETF you can use is the XLE ETF. This one represents a basket of equities, of stocks in this space. It has a strong correlation over time to the positive correlation to the price of oil. So I wouldn't be surprised to see the XLE, if this continues the same path, which is quite likely, to go somewhere into the mid-60s, would be kind of my guess. Over the course of multiple months is kind of the period. Of course, it can happen much quicker. It can take a bit longer, but our sort of take is at least a few months from that. Another ETF that one could look at is the OIH ETF. This is oil services stocks, also, of course, equities relating to the price of oil. Here too, I mean, this one I think actually has a lot more upside. I wouldn't be surprised to see something in between 400 and 500 when it's all said and done. Maybe this takes a bit longer, but very, very bullish on something like the OIH ETF. So those are some profit targets or some price targets we have on oil and some related ETFs. The second part that I thought I would quickly show you is, and we've talked about this now many times over the past couple, I don't know, at least past year or so, I think, here in these videos, and that's just the price of silver. Now, it is important, as I said before, to understand and respect the fact that silver is a much more volatile instrument, so you do want to have an appropriate time horizon, meaning a bit longer, and give yourself a lot more wiggle room, position sizing smaller, just because it is a more volatile thing. The price of silver continues to act very well. There's a lot of fundamental reasons and structural reasons to be bullish it. Some of it being related to ultimately when we see less growth. So it kind of works in both. Going forward, in our opinion, has a pretty bullish backbone, both once growth starts to decelerate in the economy, but also as it continues to accelerate until that point, because it also has an industrial use, right? So we do think there's quite a bit of tailwind there. This is the long-term monthly chart to give you this a bit more on a daily chart. And again, it's more difficult to really time silver, as I said, but I think something in the high 30s through, and this is probably more like a 12-month lens. It could happen much, much quicker, but I think something through the lens of the multiple quarter lens, I'm going to say for right now, is probably the high 30s for now. I think that's a pretty good sort of reference point, and the high 30s does get us back to, within, a stone's throw of the highs we saw in 2011. So that's that. Now, of course, again, same question, same game. A lot of people ask, I don't trade futures. I want to do this with an ETF. No problem at all. An ETF that we've continuously highlighted. There's actually two of them. One of them, the SLV. Here too, you can see the same. Just again, it's the price of silver. So if we were to see a move higher here again, somewhere in the mid to high 30s on the SLV does make sense to us. And let me actually check one thing so I didn't. Yes. And then the other one, if you really want to sort of lever your bet a bit more with a bit more volatility, there's an ETF out there. It's the SILJ ETF, and that one essentially represents junior gold, silver miners. Here, quite frankly, the sky's the limit, and it is even more volatile than silver. But here, I wouldn't be surprised to see something in the high to mid to high 20s. So that's also a good reference point, and again, more or less in line with the move in gold. It could go a lot higher. Just be aware of the volatility of this. So I hope this makes sense, folks. Any questions, let us know. Thumbs up, like, and we'll see you soon.